If I was doing any better, I would be you. Welcome to the Greatness Academy podcast. I am on with D. Munford, one of my really good friends, and he is also a loan acquisition officer. We're going to talk about some really good things, man. I'm super excited to have you on the show. How you doing, my man?
Oh man, I'm blessed to be here, man. Thanks for having me, man. I'm excited to talk about this stuff.
Yeah, I mean, I think it's very fruitful because a lot of people don't know what happens on the back end of, trying to get a loan or even looking into uh acquiring properties and cars and houses and boosting their credit to what their credit needs to look like. How does bankruptcy affect what that looks like? What can you see, what can't you see, and things of that nature. So I think that's really fruitful. So let me ask you, how did you get started in your journey on your way to becoming a acquisition officer?
Well, actually, I've been wanting to do this for a while, and I had been putting it off. And so actually it was my mother passing. My mother
Mm.
passed, and I was like, I'm gonna do everything that I've set out here to do. Everything that I wanted to do, I'm gonna do it now.
I
I'm
love
not
it.
gonna take time. You know what I'm saying? So that I decided to take the class. I actually met someone who was actually my realtor,
Oh, nice.
uh, my house, and we were sitting there talking, and she was excited to give me the book. She was like, "You know what? You're interested in trying this?" She was like, Here's the book," and I was like, "What?" I was like, "This is a sign. Go for it," And so that's what I did. I went for it. I took the test. I failed it the first time. Could have cried, because I put everything into it. And then I took it again. Second time I passed.
Nice.
So it definitely was a journey, you know what I'm saying? But it's exciting, and I enjoy it.
Yeah, so let me ask you this, right? So, I don't think it's a misconception. It's just ignorance, and we don't all know kind of the difference between, well, the kind of the structure of, let's just say buying a house. What's the difference in between the realtor and then the mortgage loan officer, and then who are like the key players? Are there any underwriters involved? How does that process work?
Well, when buying a house, it's going to be you're going to use a realtor. And it's funny that you asked that question, because a lot of people, everybody is trained to go look for the realtor first, right? You go look
Right.
for a realtor, look for a house. It really, in actuality, it wouldn't hurt to come see us, the mortgage brokers, the loan officers first, right? Because you would be able to get a total cost analysis, which is going to tell you exactly how much money you can afford, right? Because people already go into buying a house, and you think you're going to get a house for 500,000. They're like, "Hey man, I can afford 500,000." But in actuality, the numbers have to show that. You know what I mean?
Right.
So they go off debt to income ratio and a lot of other factors. All right, that's coming in and out of your credit and your profile. So in other words, you come, you get a pre-approval. We find out the numbers. We see what you can be approved for. Then you can go find a realtor, and then the realtor helps you find the actual home that you wanted. So now you have an exact number of what you can work with, and you'll have a better understanding of what you can get, and you won't waste any time.
Right. And I think that's a great point. When people are actually looking at their budget, looking at what they're trying to spend, and if they're good at, counting their money down to the penny, it would be ideal to say, hey, this is what I want to spend on my rent, because, ideally you want to spend about 20 to 25% of your total income on your housing. And so this, really includes, if you're going to buy a house, your mortgage, the insurance, and then the property taxes. So you want to include all of that. Let me ask you, is it is it most of the time when you're going to get a mortgage, are those three things wrapped into the mortgage, or do you see some cases where it is the mortgage and then the homeowners are paying for the property taxes and the insurance themselves?
Actually, they go both ways, and different loans are structured in different ways. Most of the time, and I'm talking about 80% of the time, it will be wrapped in.
Yeah, and that's probably what you would recommend someone do if they're doing like a 15, 30 year mortgage. They probably should just tie it all in together, or yeah.
Absolutely. I mean, most of the banks will require you to us to tie it in, because it makes more sense, and it just helps, because if you lapse on that insurance, you're done.
Right.
You know, So that just to avoid all that, they wrap it all into one payment, and it helps.
Nice. So let me ask you about really kind of like daily duties of a loan officer. What does that look like? And then what do you look for in potential clients, or what should potential clients look for in what you do?
Well, a typical day for me is I'm all on. I do a lot of this online, so a lot of this is I don't have to be in an office, because I work with it's just myself and my boss, so
Right.
we just work legit by ourselves. We call realtors, we call companies, we call everyone to try to earn their business by just letting them know what loan programs we have specifically for them. Like we have firefighter loans, we got VA loans for us military. So there's all different kind of loan programs. I try to talk to clients and stuff like that, find people that that are looking to buy a home later. We're not trying to we don't just focus on who's trying to buy a home now, because me personally, I got into this business to help people who never owned a home. That's what I get pride from doing, from helping people find a home that never knew that they can get one.
Yeah, and I think that's huge because a lot of people really don't try to buy a home because they don't understand the process and they believe that they can't afford it. In cases where you've seen, what does it look like with mortgage versus rent? Like, what would you recommend someone um, look at in their personal finances to say,
Mhm.
hey, a mortgage may be better than paying rent?
Well, I would look at the average rents in your areas. Where I'm at in the DFW area, I mean, you're looking at like $1,200 to $1,300 for rent for one bedroom apartments.
Wow.
And so that right there tells you that you can afford a home. All right. You
Correct.
can get a $250,000 house, you know what I'm saying, for the same amount, as long as you got the money down. So, I mean, a lot of times people don't understand that they can afford the home because they've been paying rent for so long. And now they have programs where, you don't have to put as much money down. So, because a lot of times that's what the issue is. Okay. People can afford the rent, but their rents are so high that they're not able to stash the money how they want. They're not
Right.
able to and save the way that they want to. And so now it's there with these programs, it allows people to be able to get in this position. So now when people get their income tax money, it's time, it
Right.
can be time
Right.
on, and
Right.
get out of that rat race of rent.
Oh, I love it. So, in your experience, what are some of the challenges that borrowers usually face when they come see you? What are some hard stops for you? Or hey, go back in and do these a couple of things to figure it out.
Well, for me, there's a lot of different challenges, and most of it is just being direct and being upfront. The customers, they come in, and they'll tell me, that they got this and that. They'll tell me, "Oh, I make 50,000," and they only make 30,000. You know what I mean?
Right.
So those are the things, we have to be honest with one another when we're working with one another, so that we can get the best look at first, because I can tell you that you're pre-approved, right? And then once we get into underwriting, they find out that, hey, these numbers aren't exactly what they are.
Right.
If you're buffering stuff, I like to buffer under. I'd rather somebody buffer under what they make if they're making commissions and things of that nature. So that way, when we get the pre-approval, if it comes out to be more, then we're in the gold.
Right. Right.
But things are under, it creates a challenge, because a lot of people will leave out thinking that they're on the road, and they're actually not.
What are some loans out there um, that you would recommend to first time home buyers?
Um, well, FHA is usually the main one that people go for. The FHA loan allows you to put down 3%, which is pretty relatively low. It does carry a mortgage premium. You have to have that insurance, and so that is one of the ones where it's going to be wrapped in as well.
Yeah,
So
that's good
it,
for
would-
them.
it would wrap that in there. They also have now a 1%. I have a 1% loan, right? and it's actually a conventional loan, so you don't have to carry that insurance. And my bank is going to cover the other 2%.
Nice.
Now, in order to get this loan, you have to make less than 50% of the annual median income. All right. So that means like if let's say they make 100,000 here in Richardson, Texas. All right. Everybody's average salary is 100,000. You only make 50,000, you can qualify for this loan.
Wow.
And so excellent opportunity for people that work in factories, in the grocery store, in, fast food. This is an excellent opportunity for these people, and they need to jump on it ASAP, because I don't know much longer this is going to be here, because they're giving a lot of money away.
Yeah. And that is kind of a telltale sign of the economy, and people really should pay a little bit more attention to the economy.
Yeah.
But the timing of what's happening is opportune, because when inflation is high and you're looking at being able to borrow money, down payments, the less you can pay, right, the better off you are. I think that's really key to getting yourself started. So let's talk a little bit about real estate investors. So how does that loan process work for someone who wants to get into real estate investing?
Okay. So for real estate investors, it can work a plethora of different ways. All right. So for the typical person that wants to buy a secondary home to rent out, you're going to have to put about 20% down. All right. But there are things called there are different programs like hard money. All right. Hard money is a different type of program where they will give you the money for the purchase of the home, for the rehab, and everything else. So then all you got to do is sell the house. All you got to do is fix it and sell it. So you have the fix and flip loan, and then you have the hard money loans, and then they have hard money loans also for rentals. People didn't know that. A lot of people didn't know that they have hard money loans for rentals. Now, I really don't suggest them because they have astronomical interest rates. So just imagine, I mean, right now the interest rates can be 8 and 9 just on a regular. Just imagine what they are for the hard money loans. They're
Right.
typically so. It's really high, really high.
Yeah. Let's talk a little bit about.
If you can use other people's money, why not?
Right. I think that's the kind of the biggest advantage of looking at real estate investing, is the ability to be able to use other people's money to make money. It is a very fascinating strategy to me. But one I've seen, and I was going to use it, but it just really was just over the ticket that I could afford. But construction loans. And so how does construction loans work? And then what are about a typical rate of in the construction loan?
Well, construction loan for a residential property.
Residential, yeah.
So yeah, you're going to be looking at around the same, and that's the crazy part about it. It's like a lot of people don't know about this, but you can build your home for about the exact same rate, as long as your credit is good. So you're talking right now, you're talking about an 8, a 9% interest rate on a construction.
Yeah, that's not too shabby. And that was one of the things that we were looking into. So we went, we looked at this home. First of all, the price was crazy low. So I already thought like, hey, something's wrong with this house. We get into the house. There were a number of things. The people had dogs. They had a pool that they haven't used in 10, 15 years. And so there was a lot of stuff that needed to happen to this home. And so, when we were originally looking to spend 200,000 to 300,000, and this is on a second home, looking to spend 200,000 to 300,000. Realistically, we're probably going to end up having to spend about $500,000, which wasn't out of my price range. Like 450 was really what I was looking at. What happened was, as we were looking at the home, the foundation was not not ideal. And I'm saying, hey, so what type of engineer would I have to hire to do this? And they would say, hey, easily 10 to 15,000 if something needs to be fixed, but you're probably going to pay 5 to 10 for somebody to look at it. So
wow.
Yeah, so right then that took it straight to $500,000, and I was thinking, is this extra 50,000 worth what I put into, and then what can I sell it for? In the neighborhood, ideally, I could have made $150,000 to $200,000, but where my pockets was, it just wasn't right. And then, I didn't have the time to wait, right? Uh, closing on the loan, and then once you close on the loan, close on the house, and then actually do the construction. Then once the construction is done, now trying to put it back onto the market. Then, hey, where would a market be 6 to 8 months from now? Right.
Absolutely.
So it's just a risk I wasn't willing to take.
Right.
Um, what other types of loans have you seen for people who were trying to either buy their first home or buy another home? What types of loans have you seen that drastically help people get through kind of their financial situations, kind of like cutting it close, like I would have been?
Right. So cutting it close. So like you mean like a situation where somebody was not able, wasn't going to be able to afford something, and then they were, or you
Yeah,
mean
so
like,
yeah, like if say I my budget is
mm,
450, I really want this home. I need 500, but my numbers basically say, hey, my max stretch is 450. What could I do at that point?
if you wanted, if you're trying to build, then you'd have to look for another builder.
Yeah.
Far as
Yeah,
like the loan process, it's like, once you're only approved for that amount, that's what you
that's
get.
it.
Once they say they come back and they say, hey man, he's approved for 450, you're approved for 450. The only thing you can do is talk to your realtor and see if they can get you a better deal on the home, or you can come up with a little bit more money down. Um,
Mm, I didn't think about that.
and a lot of the times you can take, you can borrow the money as well, because a portion of your down payment can be a gift. And so you can borrow the remainder of the money from someone else. You just can't take a loan. You can't necessarily take a loan for it, because that's going to mess with your debt to income ratio.
Right, right. Yeah, I think that was one of the key pieces I was looking for right there, right? So like as far as when you're going to look at your loan, when
Mhm.
you're getting a loan, basically what you guys are looking at is, hey, what is your debt to income ratio? Can this person afford to take this loan? If you start to max out what we can give you, right, you can't go anywhere to get another loan. Like I mean, it is what it is. The only thing you can do really just kind of get hard cash, and or again, get it borrowed, but it can't be a
Right.
loan that can be captured. Um,
Right.
so how do you stay up to date with the latest like trends of the market and things of that nature?
Oh, I stay subscribed to all the different banks that I work with. They blast me with emails every day, so I got to spend some time to read and keep myself abreast of everything that's going on every day, because things change every day.
Right.
So it's like they have it's like almost like a news ticker thing
Yeah,
that we have.
yeah. Yeah, you like, hey, what's hot today? What's
Message
hot this
all
week?
day like, "Ding, up, it's went up. It's at 10% right now. So if you didn't close, hurry up.
Yeah, yeah,
And that's
yeah.
that's been a things, a lot of the times we need to lock loans. We need to lock them fast, because the rates they're all over the place.
Right,
You you can come in the morning and it'd be a 7, and by the end of the day it's at a 9. You know what I'm saying?
right,
So I'm talking to somebody, they might want this loan, but we didn't lock it. You see what
right,
I'm saying? And so by the time, 4 o'clock comes, when they call back, the rate's at 9. They're like, oh shoot, I don't know if I want that.
right.
So gotta move fast these days.
So I would say that you probably would suggest to people dealing with like loan officers and uh other brokerages, and they seem like they're rushing you. It's not
Yeah,
to
it's not necessarily them rushing you. I mean, we want to make money. This is the only way we get paid, is when we close, and that's just the way it works. I
right.
mean, and a lot of times we're doing a lot of work with no hourly pay. Like last week, I was working on a loan for 6 days,
Ooh.
6 days, and this guy decided to go with someone else.
Oh, that's sick.
Yeah, so you know what I'm saying. We do a lot of work for free, and other people. And just think about this: every time somebody else touches a file, let's say I'm working with you, right? and we're trying to get this thing together. I'm going to talk to another loan officer. We're going to sit down. We're going to try to figure out some kinks. We're going to work some things out. They don't get paid. The underwriters don't get paid when they touch it. You know what I'm saying? So then when you
Right.
decide you don't want to go with us, well, everybody just works for free for 2, 3 days. You know what I
Right.
mean?
Right. Right. And then
So
on top of that, as far as the client, now they're probably not getting the rate that they wanted because hey, we were trying to lock you in somewhere much lower, and now we wasted time, and then you just wasted money, especially if you go somewhere else and you can't get that same rate.
I got the guy 5.5, and he decided to go with someone else to get a 6.35.
Oh,
So,
sick.
that's what was more sick. It's like I got you the lowest of the low, and
Yeah.
you decided to go with some, because they sometimes people want to save money too, so
Right.
it's just all about how. That's why structuring loans is it's really based on you, the individual. So that's why coming to a loan officer instead of going to a bank is more ideal, because the bank is just trying to push a loan down your face. I have different banks, I have different programs. So when you come to me, it's all about you and your program and what you want to implement and how you want to go about it and what your income is and what your goals are for the future. So
Yeah,
we can sit down and plan this thing out.
I like that. I like the ability to have, so I work in insurance and we what we call it is non-captivity, right? So I don't work for any particular company. And just being able to have that ability to give the client what they need is super dope. And so I think that is really key to the listeners to understand, hey, when you go see a loan acquisition officer like D, what's going to happen is he's going to give you the best rate that he can find. When you go into and I'm not going to name drop, if you go into your bank is selling you their product, and if it's 7%, then it's 7%. It ain't big borrow and plead. You get what you get and you don't throw a fit.
And actually, what I like to tell my clients is, man, I can turn this computer around and let you see the rate. All right, you can choose whatever rate you want. Just know that it comes with a price.
Oh
You know
yeah,
what I'm
for
saying?
sure.
So the chart will show you, hey, this is where your credit told you were, and then it'll say, hey, this is the amount that you would have to bring the closing. Then there's a chart. Then it can either go up or down. And when the chart goes down, when you want to bring your interest rate down, the price on the right side goes up. So you can get any rate you really want when you're messing with a mortgage broker. You can get the lowest rate possible, but it's going to come with an extra cost. So that means that you just need to have a little bit of extra money for closing, and it's going to save you thousands on the back
Right.
end.
Right. Especially on that interest, especially if you're doing anything over 15.
I mean, look at it like this: if you got really good credit already, right? Let's say you got in the sevens, and you come in and we're still trying to give you a 6 and 7% interest rate. Well, if you put 1% down on the loan amount, right, you can take that down a whole percent.
Mm, So the more money you got up front, the less you're gonna be paying in interest.
That's money you're going to pay in the end. So have the best credit that you possibly can have, and have a little bit of extra money to buy down your rate.
No, I think that's exciting, man. So, hey, share me some success stories through your time doing this, man. Like, what are some of your good news stories, or where somebody got them into their first home? Tell me the story about it, man.
Man, it's there's so many different stories, about. I like to tell my story is
Let
what
me
I
hear it.
really,
Let me
you
hear
know,
it.
so, me and my wife, we were both in the military. And so when we moved to Colorado is when we decided we wanted to buy our first home. And this is really how I got on this journey, kind of, because buying our first home helped us significantly. And it just opened my eyes to the power of real estate.
Mm,
So we moved to Colorado Springs, Colorado, and we stayed there for 3 years until we got ready to go to Belgium,
okay.
right? So we ended up selling it. We bought the house. I think we bought the house for 189. We ended up selling it for 280 something. So we made a nice chunk, right?
Man,
We were able to pay off her student loans. We were able to pay off some debts that I had, and we were debt free. So that right there was
Yeah,
key
that's
for me.
yeah, you
Checking.
like
I
this
always
might be it.
I always wanted to invest in real estate, right? I always That's something I always wanted to do, but I just never did it. You
Right.
know, out of fear of not knowing about the loans, and that was another thing that kept me from doing it is I didn't know about the loans. Just didn't trust that. Like I'm gonna take somebody else's money and then I'm gonna owe the bank forever. And now that I'm a loan officer, I see how it works.
Right,
So
right,
now,
right.
so all of these things played a part. So like I said, when we sold that home, it allowed us to pay all of that debt off, and we were debt free. And we're like, dang, our credit just went up. Everything just started happening, right?
Yeah,
Because
yeah.
of, and I'm like, man, just think about that. All you got to do is go to a neighborhood that's brand new, purchase a home, and then every home that purchases, every home that's built in a neighborhood that's new is $10,000 in equity for you, right? So you buy a house. So when I bought this home here in Dallas, Texas, once they built the house next to me, I got 10,000 equity. Once they built the house over next to that side, they got 10,000 equity. So that's all you got to do is save your money, buy a house in a popping neighborhood that's growing, right? Watch the money grow, and then hold it for 2 to 3 years, and then sell it. You
Wow.
make 100. You make 100K every year.
Wow, that's the game. That's the game. That is the game, my man. Um, in your opinion, what are some essential um financial skills that people should have prior to um coming to see you?
You don't really have to have any financial skills. We're going to work with you how you come, and you're going to learn with us. You know what I'm saying? This is the way I work it is like I'm working it as if I'm a credit repair specialist because that's what I used to do too as well. I used to help people repair their credit. And so when you come to me, we're going to talk. We're going to sit down. We're going to talk about your situation. You're going to show me your credit profile, and we're going to pick through this thing with a fine tooth comb, get you on the road because it's really about will and discipline.
That's it. That's
A lot
real.
about will and discipline. It's like people have the money, but you're spending it on other stuff.
Right.
Yeah. I just told one of my buddies the other day, I was like, man, when you gonna come talk to me about getting a home? And he was like, man, he's like, I gotta save the money. I was like, man, look down on your shoes, man. You got on Gucci.
You got
I just
it.
the closet, bro. You got Christian and Louis Vuitton shoes in the closet. If you got 10 pairs of those, that's a down payment right there. That's your down payment for your home right now.
Right. You wearing
Yep,
it.
wearing it. So it's
Yep.
like it's all about our priorities, what we like to do or what we choose to do with our money. If you come and sit down with us, then you got an accountability partner because I'm not gonna let you slip on it.
Right.
You know,
Right. No, that's amazing. So, like looking at credit and the aspect of coming to see someone, and then you see their credit, you see their debt to income ratio. About how long does it take if they're not qualified where they want to be or qualified at all for a loan? About how long does that take to fix and come back to see you?
where typically we want your debt to income ratio to be around 42%. They say 43, but I say 42%. And so a lot of times people just make simple mistakes. It's just simple mistakes with the choices that they make. If you're looking to buy a home, you don't want to buy a brand new car.
Mm,
That a new car would take $80,000 worth of buying power off of your stuff just because you have that loan on there.
right.
You know, so it's like it's a lot of times just more debt to it's more about the debt to income and like how much money is going out and relative to your a lot of times people are going overboard with their credit cards. You're typically supposed to spend, about 30% of your credit cards and usually pay them in full if you can. But if you can't, keep it under 30%. A lot of times people, their credit cards are almost maxed out. They kind of go overboard with the credit cards. You got to be intentional. A lot of times people need to be more intentional with their purchases and how they want to do things. Buying things cash if you can. You know, Even though you got a credit card doesn't mean you should, buy the couch on your credit card.
Right.
You know, still save up, maybe half of it and then, pay the other half with the credit card. Keep everything low.
Hey, I got a question now. So this kind of rung my bell when you were going through it. So I actually got a couple questions. The first question, though, I just want to kind of clarify. When you talk debt to income ratio, can you explain that a little bit more? So you say your debt to income ratio is at 42%. So what does that mean? Like, how much do I make? And then that 42% is based off of the how much I make. So let's say I make $100,000.
Yeah.
I can only be in debt a specific percentage of that amount, or how does that work?
Yeah, 42% of that is what you can have. So pretty much all they're going to look at, all we're looking for is like your credit card payments. That's the main thing. Your credit card payments, your and your house, anything that's like in your house, like your house bills and things of that nature, and your rent. So those three things really is basically what we're looking at. And those three things will
That's
have
the
you.
telltale. Right, right, right. Let's say
Things can have,
if you,
I mean, they're
yeah,
not looking at your cell phone bill, your smaller things like that. They're just looking at that credit card. How much money are you putting out on your credit cards every month? How much money are you putting out for your rent and your car notes? If it's less than 10 payments, there we have to report it. So
right,
some of the things that we usually tell people. Like sometimes people they owe something on their car and they got a couple dollars, but like, hey man, pay your car off because that's going to help. That's going to put you in a better position and it's going to boost your credit for one, for two.
right,
So it'll be things like that, or paying your credit card down, like paying the credit card debt down past a certain amount because we know that we need your payment to be only 500, but your payment right now is 750.
right, right. That's
You know?
crazy. This is like, well, that's when you figure out if the math is mathing or not, right?
Yeah, for sure, for
So
sure.
my other question would be kind of looking at, so some people have different strategies with credit cards. Are
Hmm.
you looking at, their total max borrowed power on their credit cards, or simply what they have debt on? So let's say I have like a person like me, I probably have 6 credit cards. I only use one. The other ones I use to kind of just keep that high level of
Station.
yeah. So basically it shows that, hey, I can borrow a lot, but I only use maybe 5-10% of it. So are
Right.
you looking at that 5-10%, or are you looking at that all of that borrowing power?
They're looking at all of it actually. So we're looking at how much you have, how many different credit cards you have, because that right there shows, like you said, the responsibility. So you got 6 credit cards, through different institutions in the range from 5 to 10,000, and then you got and then some people might only have one card, but how do they use it? You see what I'm
Right.
saying?
Right.
So they're looking at how you use it, how much money you already borrowed, and how much money you already are responsible for, and do you make your payments on time, and also pretty much how much money is it total,
Mm,
how much is on your credit profile total. Okay, he's got 100,000, he's got 100,000 in credit cards, and then he's got a $50,000 car. He's looking real good. He's paying all this stuff on time. He keeps his stuff under 30%. You're gonna be a prime borrower.
right. Right. And I think that's why I just want to try to keep myself and other listeners into
Mm.
that mind frame and that ballpark of saying, hey, how do I become a prime borrower? One of the biggest things that I think is important of being a prime borrower is how to use that money to make money. And can we kind of hinted on it, but do you have any stories of clients who are able to do that successfully, to be able to, come get a loan, fix up something, pay that loan back, and then come back and get another loan? Do you have any stories like that?
Oh, absolutely, man. I plenty of guys that come and fix their credit and establish their business credit and move on and do big things. One of them is Seven Complete. My rap buddies, he came through and they got their herbal teas going. And
Nice.
so it's it's all about getting your having a one thing I heard you say is you were like, the profile. So
Yeah.
the profile, one thing I can suggest is that you have a full profile. And a lot of people don't think about this, right?
Mhm.
So credit consists of a lot of different areas, right? You got your residual credit, right? You got your what do you call it? Your revolving. You got your
Revolving
revolving
credit. Hmm.
credit lines, right? So you want to have a full credit report. You want to have a little bit of everything. And see, me personally, what I try to teach my students is let's mess with every institution that you want to mess with, right? So let's go for me. Let's talk about myself. So me, I was in the military. So of course we're going to use Navy Federal, right?
For
Navy
sure.
Federal, the best banks, right?
I love it.
We got USAA. USAA is great with for insurance, right? So we
For
use
sure.
USAA. I got hip to PenFed. I'm gonna drop another gem. If you got anybody listening, you guys are military, you want to use PenFed. PenFed is really good with giving out nice credit lines. All right, all right. So then now that I have those three, those are the three anchors for me as a military person, right?
Right.
Now I'm looking on the other side. Now I'm going to got Mastercard, Discover, right, and Visa.
Mm.
Mastercard, Discover, and Visa. So you can mess with Capital One, and then you got Capital One, right? Vehicles. Capital One is very good with vehicles. So you got
Yeah.
Capital. So that's how you stack your accounts. So now you're looking at my accounts. You're like, whoa, wait a minute. He's got, you know, three different banks, right? Then I got credit cards with Visa, Mastercard, Discover, right? So
Right.
that way, now I'm building relationships with all of these different institutions, right? So now they're not only going to mess with me, right? But now they're going to compete for my business.
Oh yeah, for sure. Because they know, hey, he will go somewhere else and he will get a good rate.
Right. So now when I got a $10,000 credit card from PenFed, right?
Right.
So Fed's like, why he's using it to PenFed more now. So now they sending you something for 15,000. You see what I'm saying?
Right. Right.
They
Right. Let's up your
15,000
rate and lower your percentage.
right. We're gonna send you something else with the same points. Use our card.
That's amazing. That's good. And
I
I
wish I would
never
have
thought
learned
about
when I
that.
was younger. I wish I would have had the discipline. Well, and I kind of knew this kind of stuff already, but I just wasn't disciplined.
Yeah.
You know what I'm
Yeah.
saying? It's all about patience.
No, that's clutch, man. Um, what are some key takeaways or lessons you learned throughout your career? And like some of the wisdom that you've been given so far from other officers.
Well, just when I went home to Cleveland, I met with the top loan originator in Ohio. His name is Kosh Shagafi in Cleveland, Ohio, and he told me to just stay persistent. He told me to stay persistent. Don't the things aren't going as fast as I would like them to go. But I want to take off.
Right, right,
But
right, right.
really a journey. It's a journey, and it's you have to enjoy the process. You have to learn to enjoy the process. Learn not to take no's as a don't take it personal.
Right.
Some people aren't going to be ready. Some people aren't going to be ready to receive, and some people aren't going to mesh well with you, or they're not going to like you for some reason. They might just want to go with someone else. Sometimes it just happens. So just remain consistent and just stay genuine and enjoy your job, and people will be attracted to you.
Oh yeah, for sure. And I know, I mean, I call you probably once a week, once every 2 weeks. Hey man, I need. So I definitely thank you and appreciate you for those gems. How can people get a hold of you? You have any social media or tags or anything you want to put out there?
Yeah, it's Money by D Month on Instagram. And my telephone number is 216-618-8710. If you know anyone in the Dallas DFW area that's looking for a home, looking to become a homeowner in the next 6 months, give me a call. We can work out a plan.
Oh yeah, for sure. And then I'll definitely drop all of that in the description as well. So let me ask you, man. I usually ask all the folks I interview, I usually ask them this great question, man. It's one of my favorite questions because I think it's a kind of a telltale of who you are, right? So, what is the largest one-time purchase you've ever made, and then how did that make you feel?
Oh, well, the largest purchase is this home that I'm sitting in right now, and it was 392,000. And the testimony is that it's worth 610,000 now. And 2 years.
The bag, the
So we talk.
bag.
That's what I'm talking about, and this is what so powerful about real estate, because who can make 200, who can make 100 and 200 in a year by not doing anything, just living.
Right. They like, I'm gonna just live here and then I'm gonna go do my thing. All right, I'm
Right.
ready to go. How much is this worth?
Mm-hmm. And now I'm trying to figure out what to do with it. You know, what to
Yeah,
do. If I want to sell it, no, I don't want to sell it because shoot, it keeps going. I feel like it's going to keep going up.
right.
So what I do is I'm going to take some equity. I might take some equity out, do another project, or I might just. I'm looking at some land too. I kind of want to do something with some
Nice.
land, and me and my brother-in-law were talking about getting some cows and doing some, doing some cattle type stuff, some
Yeah,
country.
yeah, yeah.
So
That man in the Dallas area about to be a cowboy. A
yeah,
real one.
for real, they really got outdoor stuff out here, and I'm really enjoying it.
Yeah, I loved it, man. I spent some time down there in Killeen. I don't know what the base is called now. I'm gonna get around to figuring out the new names of the
Fort
bases.
Hood, Hood.
Yeah, yeah. So yeah.
Yeah,
I enjoyed the area when I was there, and it kind of turned me. You know, I'm originally from Detroit, man. That kind of turned me into a cowboy when I moved down there, and I think that is one of those centralized places. I definitely have a couple of realtors in that area, man. I'll definitely shoot them your info because
absolutely,
I didn't think about it when I said it when you said it out loud when you said it you in the DFW area, and I thought I actually know a couple of realtors in that area that it would be great for you to work with, man.
absolutely. I would look forward to working with them. I'm always looking to add people to the team, and I'm looking to expand. I'm trying to get some more states under my belt too. After I conquer this state, I haven't conquered this state at all yet, but
But
it's coming
you
soon.
on the way. Just like you say, be persistent, right?
That's it. You just got to stay persistent and really want to do it. And so actually, I'm working on getting my real estate license too as well.
Nice.
I'm not trying to leave nothing on the table. I'm not trying to leave nothing on
Nice.
nothing for chances. You know.
I was gonna close this out, but now I'm gonna ask you another question because that just makes me feel like, hey, there you could really be getting to the bag. So,
Mhm.
with you getting with you becoming a realtor, does that allow you to be a one stop shop? I mean, outside of underwriting.
And that's why I'm doing it because last year I went through a lot of challenges. Because even though I was working with a lot of people, I was going out and finding a lot of clients, and through finding clients, I was getting them pre-approved, and they were getting excited, and then they were wanting to go with a new home, and the new homes would only give the money that they were giving out. The $20,000 and $30,000 that they were giving people for their homes, they would only give them to their loan officers. They wouldn't honor me for bringing the client. So I
Right.
was my clients in there and just like losing them and like having to be cool about it and not make a dime off of this stuff. And so I was really frustrated for a while. And I was like, man, how can I avoid this really? And
Right.
so I was like, what, get your realtor. And in that way, if they end up wanting to go with a new home, I don't lose on the realtor. So I can still represent them as a realtor, and they can get the best move for them, and it won't hurt me.
Right. Yeah, that's killer,
I lost,
man.
I lost like 5 to 10 deals like that. And so I was like, how do I, in 5 to 10 deals, I mean, a lot of loan officers don't get that in a whole year.
Right. Right. And
So
that's one
I
of those
was,
things you live and you learn.
yeah, you live and you learn. And so that was one of the things I was like, you know what, how can I avoid this? Because I still want to help people. I want to be pleasant about it. I still want to be able to smile. I mean, just imagine, having a sale and then you're presenting it to the builder, and then they just offered them some money right in front of your face. And it's too good not to take.
Right.
20 and
Right.
payment, that means you get to keep everything. You get to keep all your money now in your pocket. So
Right.
they're looking, it's like I got to smile about it, and still, be professional, And it hurt. It hurt.
Yeah, I know.
Home, I was coming home. I was frustrated. I was out there on the punching bag, and but I was like, you know what? It's got to be a way. And so when I found out that I can do both, and what's going to be so powerful about this is I'm going to be able to provide even that much more of a discount.
For
You know what
sure.
I'm saying? I can take cuts on either side in order to help the customer as much as possible.
Oh man, that's the
But we
game, brother. That's the
we gonna
game.
push.
To the bag, man. D, thank you for coming on, man. On the show, we say that winners win, and we win when you win, and we want to thank you for being a winner, my man.
I thank you appreciate you for having me, man. This has been an awesome experience, man. I'm just thankful.
Yeah, for sure. And you know I'm gonna have you back on, man. You know I'm gonna have you back on because this was great information. There's gonna be 100 more questions that I'm gonna want to ask you, but like I said, I try to do these in 30 in a minute increments so the listeners get the best information out of it in the shortest amount of time, man. But thanks for jumping on, brother.
Oh, you're welcome, man. I look forward to coming on next time.
For sure. And we're out. Boom.